If you have ever made money and still wondered where it went, this video is for you. If you have ever run a small business, side hustle, online store, or investment portfolio and felt busy but not profitable, this is for you. Bookkeeping is not accounting jargon meant for big corporations. It is the basic financial skill that separates people who guess from people who know. In 2026, with digital payments, mobile money, online platforms and tax authorities becoming smarter, sloppy money tracking is no longer an option. The truth is, most people fail financially not because they don't earn enough, but because they don't measure properly. In the next few minutes, I'm going to walk you through bookkeeping in a way that finally makes sense. From zero knowledge to confident control. No hype, no shortcuts, just the system that serious money builders use every day. Bookkeeping is the daily discipline that shows you the truth about your money. Bookkeeping is simply the process of recording, organizing, and understanding every financial transaction you make. That includes money coming in, money going out, assets you own, and obligations you owe. The mistake beginners make is thinking bookkeeping is about tax season. In reality, bookkeeping is about decision-making. When you know exactly how much you earned last month, how much you spent, and where the money went, you stop guessing and start managing. For example, a freelancer who tracks income and expenses daily can immediately see which clients are profitable and which ones are wasting time. Without bookkeeping, you feel busy. With bookkeeping, you feel in control. Every bookkeeping system is built on income, expenses, assets and liabilities. All bookkeeping, whether simple or complex, rests on 4 pillars. Income is money you receive from work, sales, investments or services. Expenses are costs you pay to operate, live or invest. Assets are things you own that have value, like cash, equipment, inventory or investments. Liabilities are obligations you owe, such as loans, credit balances or unpaid bills. When you understand these 4 categories, bookkeeping stops being confusing. If you run a small online business and receive payment for a product, that is income. When you pay for internet, software or delivery, those are expenses. If you buy a laptop for work, that becomes an asset. If you borrow money to expand, that is a liability. Bookkeeping is simply keeping these categories accurate and updated. The difference between cash basis and accrual bookkeeping matters more than people realize. Cash basis bookkeeping records transactions when money actually moves. If you get paid today, you record income today. If you pay a bill today, you record an expense today. Accrual bookkeeping records income when it is earned and expenses when they are incurred, even if cash hasn't moved yet. For beginners and small operators, cash basis bookkeeping is usually best because it reflects real cash flow. For example, if you invoice a client in January, but they pay in February, cash basis shows income in February, which matches your bank balance. This helps you avoid thinking you are profitable when the money hasn't arrived. In 2026, with unpredictable payment delays and subscription models, cash clarity is power. Setting up a simple bookkeeping system takes less time than you think. You only need 3 things to start bookkeeping properly. First, separate your personal and business money. This alone fixes half of most people's problems. Open a separate account or mobile wallet for business use. Second, choose a recording method. This can be a spreadsheet, accounting software, or even a notebook if you are disciplined. Third, record transactions consistently. For example, at the end of each day or week, write down every payment received and every expense paid, including the date, description, and amount. A small trader who records sales daily will immediately notice slow days, peak days, and cost leaks that would otherwise remain hidden. Categorizing expenses correctly helps you reduce costs without guessing. Not all expenses are equal, and bookkeeping helps you see that clearly. Grouping expenses into categories like marketing, utilities, transport, supplies, and subscriptions allows you to spot patterns. For example, if your records show that delivery costs are rising faster than revenue, you know exactly where to act. If software subscriptions quietly eat profits every month, bookkeeping exposes it. The practical step here is simple. Whenever you record an expense, assign it a category and be consistent. Over time, these categories become a financial map of your business or personal finances. Reconciling records with real balances keeps your numbers honest. Reconciliation means, well, comparing your bookkeeping records with real-world balances, such as bank statements, mobile money statements, or cash on hand. This step prevents errors, forgotten transactions, and, false confidence. For example, if your records say you have $1,000, but your bank says $850, something is missing. Maybe it's a fee, a forgotten expense, or perhaps a duplicate entry. In 2026, digital transactions happen fast, and reconciliation is what keeps your numbers truthful. So, make it a habit to reconcile weekly or monthly. Serious investors do this without exception. Bookkeeping turns data into decisions, not just records. Once your bookkeeping is consistent, it becomes a decision-making tool. You can see profit trends, cash flow cycles, and cost efficiency. For example, a content creator can see which revenue streams are growing and which are declining. A small investor can track returns versus contributions. A shop owner can decide whether to raise prices or cut costs based on real data, not emotion. This is where beginners become professionals. Bookkeeping stops being a chore and starts becoming a weapon. Why mastering bookkeeping in 2026 gives you an unfair advantage. Most people still operate financially in the dark. They react instead of plan. When you master bookkeeping, you gain clarity, confidence, and control. You make smarter investments, survive downturns, and scale faster. Whether you earn a little or a lot, the rules are the same. Those who track win. Those who don't guess. If this guide helped you see money differently, subscribe to the channel for more serious finance and investment content. Share this video with someone who earns money but doesn't control it yet. Bookkeeping is not optional anymore, and now you know exactly how to do it.